Hi, Dan here on Tuesday, July 30th. I want to talk about rotating your money around, about having an intent on each position. In other words, know why you're in something. I know the deal is, well, I'm in it to make money. Well, me too. If you're not in a trade to make money, then you really need to get out of that trade because you're working something else out. But specifically, what I'm talking about is, at least in this video, if you've got a limited amount of capital, and most people do, you just pick your number. In options, it's important to keep the money working because time is money. I mean, I know, when you're trading anything, you want to be long stocks that are moving up, and over time you're going to make money if you're buying low and selling high. That's what Gary keeps reminding me. He's the super trader. He always just says, Dan, just buy low, sell high, and that's his advice to me. But when you're trading options, you're either going to have one of two. I'll get back to the screen in a second. You're going to have one really of two ideas. First of all, on a stock like Boeing, this was not our idea. I mean, it was our theory. The stock's done exactly what we expected it to do. If you go back and look at the history of that trade, you will know, though, that we actually opened that trade based on the weekly chart when the stock was like this. And as it started to move higher, we decided to buy these out of the money calls, and those were the 85 calls, under the theory that over the next several months, the stock would move higher and ultimately be much higher than it was when we entered the trade by the time that those options expired. That's the operative term, by the time those options expired. We went clear out to January because we had a long-term thesis based on this price movement. Okay, so we took a position, and that's worked out really well. Now, if we are, and just keep this in mind, right now we've got, we closed out virtually all of our Boeing trades. The only one we've got left is the half a position on the January 85 calls. We took the other half off. This turned out to be, we just about top ticked this one, at least for now. And the reason we did that is because the company announced strong earnings, the stock gapped up, and then it started to roll over. And when the catalyst is behind you, then the pricing that's related to that catalyst is already into the stock. In other words, once the stock opened up above 108 or wherever it opened up, that was the market saying, okay, hey, thanks for the new information on earnings. We appreciate that. Now let's figure out what the new multiple is on that. That was immediately factored in. It probably took about 5 minutes, maybe 10 minutes for opening rotation to take place. And then at that point, the market starts doing what it does, which is start looking ahead over the next 6 months and saying, well, where's the next catalyst that's going to push the stock higher? Answer, shoot, I don't know. Well, in that case, you know what? Let's take our profits now, because we don't really have anything to anticipate. And because we don't have anything to anticipate, well, we might as well put our money to work elsewhere. All of these things that I'm mentioning to you now are concepts that are going to come back in a second. So we don't have any near-term catalyst, and so we're going to take profits, and that's what's happened with the stock. Now the uptrend remains intact. We have half a position on now. It is up 375%. Okay, we closed out the other half at 444, I believe it was. Wouldn't it have been nice if it was 666? So here's the thing. Now you've got a half a position on at 374% profit. You only make that money when you actually take it off the table. Now I'm back to, do you have an unlimited amount of funds? Answer, no. So what you're doing when you're looking at this trade, you're saying, okay, yeah, I know it's profitable. It might be even more profitable, which is why I'm staying in the trade. But what I'm not concerned about is the contract price of my position. What I'm concerned about is the dollars that are tied up in that position, and can I get those dollars to grow, to multiply? I mean, loaves and fishes kind of thing. Can I get those dollars to grow most by keeping those dollars invested in Boeing or going elsewhere? Now, a certain amount of your portfolio you're going to want in these longer term positions, and that's fine. But a certain amount of your portfolio for a lot of folks is trading these short-term swings. And the idea is that you want to keep your money moving. You want to keep your money moving. It's fine to have a profitable position, but it's a little bit, trading's a little bit like Janet Jackson's song, what have you done for me lately? You're looking, or even more importantly, what are you going to do for me next? So you have to look at all of your open positions, and it's fine. It's fine to be going, golly gee, all of my positions are doing great. I love it. Okay, I'm looking at all of the open positions we have in our option market mentor open trades. They're all profitable except Tesla, which is down 35%, which I'll get to in a second. Valero, which is down 10%, and Broadcom, which is down 1%. All of the other trades are up. Okay. Now, am I just looking at Tesla, Valero, and Broadcom because those are losing money? Golly gee, there's that one. Ooh, there's this one. There's this one. Ooh, they're all losing money. No, I'm looking at all the others as well, because in every single one of these trades, I could have that money, I could leave that money where it is, or I could have it elsewhere. And elsewhere does not mean, I'm sorry, I just lost my train of thought. And the reason is because as I'm looking at this chart, it's now 1:35 on the East Coast. As I'm looking at this chart, I went, wow, this is a bearish engulfing pattern. Tesla's not working, so I stopped and sent out the email to close down this trade. And then I've got an alert in the meantime. Okay, that's on GameStop, which is working really nicely. Okay, but anyway, when you're looking at all of your positions, and you got to be looking at the profitable ones too, you want to be looking and saying, okay, is my money better left in this trade, or should it just be money? Should it just be cash, or should I allocate it elsewhere? Do I put it in another option trade? Now, this is not a simple answer because it depends on your intent for the trade. If you've got a stock like Boeing, your intention was always to leave that money in for a long-term trade. Now, if it's too much of your portfolio, then go ahead and take that out. But your rationale for being in the trade was that you were going to let that money be tied up for a long period of time. Same thing with ConocoPhillips. You're going to let that money be tied up for a long period of time. Now, let's say we'll go back to Boeing. Let's say you've got Boeing and you've got, 350% in the stock, and you're saying, gosh, I don't want to leave all that money in there because I want to buy some options on Facebook or something like that. Well, you don't have to close the whole trade out, but you should close some of it out. And it's not just, quote, to protect profits. It's because you want that money working elsewhere. If you think that your trade that's up 350% is going to be up, 700% in a week, then of course let that money work. But if you think that the trade that's up 350% is probably going to be up 350% next week, or the week after that, or maybe up only 340% or 30%, and you have another trade that you think has good profit generating possibilities right now, but you don't have money to put into that trade, then you go ahead and take some of this money in Boeing off of the table and rotate it in there. You see what I mean? In other words, and this is intuitively obvious, But for a lot of people, it's only after it's pointed out to you. Because for a lot of you, you're pretty new to trading options, and so you're trying to just kind of figure out this whole implied volatility thing, and what's the deal with these Greeks, the gamma alpha theta, and the sigma nu, and the lambda chi alpha, and all of that. What's with all these Greeks? What's with implied volatility? So you're looking at that thing, and you've got profitable trades, and you're just so happy that you have profitable trades that what you're not doing is you're not thinking about the money. You're thinking about the green on your screen as opposed to the red. And what I'm saying is the power of money is the power of profits. This is where you make your profits. So at some point, the trade peters out. It's massively profitable, like Boeing, but you say, I have a place to use this money. That's when you start looking, or that's when you should go ahead and take some profits or take it all off and put it into another trade. Now, this is transitioning your money from a long-term trade like Boeing to a short-term trade. Or maybe you just have another potential long-term trade that you like, that you want to start working on. So you take the money out of this mature trade and put it in to a new trading idea. So that's one concept. Now, the other that I wanted to mention is this. Two names, and I mentioned this yesterday, two names that I've really been looking at as momentum trades are Tesla, because the stock just kind of it's defying gravity a bit. Options are like grossly expensive. They announce earnings in like 8 days, like the middle towards the end of next week. This is one trade that I've been watching, and note the reversal here that I've already mentioned. And then Facebook is the other trade that I've been watching. Now, Facebook is up 5% today. Tesla is down 4%. So here's the thing. Now I'm going to switch to just to this other graph, or this other series of charts here, and we'll get into this in a sec. But here's the thing. If you've got an equal amount of money in each of these positions, you've got, 10,000, 1,000, 100,000, whatever. We'll say you got $10,000 in Tesla, $10,000 in Facebook. Both of them are bullish because you think you've got calls in both of them, because you think that the stock is going to go higher. Now, you bought Tesla a couple days ago, so you're still profitable in Tesla. You bought Facebook a couple days ago when Dan said, hey, you got to buy this thing because it's not coming back. So in Tesla, you're still profitable. This is the daily chart. And in Facebook, you're still profitable. Okay? But the Tesla trade really isn't working today, is it? Okay, you see this intraday reversal, we're seeing that right now. But if we go down here, we'll start here with the 15-minute chart. Okay, if we look at the 15-minute chart, this was working just fine this morning. These are a Bollinger Band complex. The widest bands are 3 standard deviations. The ones on the inside are just the regular standard 2 standard deviations. But you can see first thing in the morning, Tesla was moving just fine. Facebook also moving just fine. But at some point, Tesla started rolling over. And you can see it here. We'll really confuse you here. You can see it here in the 5-minute chart. How, about 11 o'clock, 11:05, something like that. I mean, I saw maybe it was a sell program. I don't know what it was. I looked for some news, but the stock just really started getting pounded. Now, during that same period of time, Facebook just kept chugging along. Okay, so suddenly, and this is a short-term trade, right? You're playing at pre-earnings, or trading at pre-earnings, or trading at T-earnings. So this was a short-term trade that you're putting on, just like Facebook. Trades working, just like Facebook, up until this time. When you see this, and you should be getting a price alert or something like that, But when you see one trade stop working, and remember, this is a short-term trade. If you're going to get jigged out of Boeing on this kind of thing, you shouldn't, because Boeing has we got January options on Boeing. It is a long-term mega trend weekly chart kind of deal. We don't really care if it goes from 105.50 down to 105 or 104 or 103. We don't care long term. But Tesla, we care. Why? Well, because we risk losing money? Sure. But there's one other thing that's more important to me. Because our other short-term trade is working nicely. So what we do is we don't like just admit defeat and say, oh my gosh, I was sure wrong on Tesla, I got to get out. No. You can think that way, but that's a defeatist attitude. You took your chance, you made your trade, it either worked or it didn't. Okay? So what you're doing instead is you're making an asset allocation, you're making a position allocation, a money allocation decision. You're saying, where can my money best be put to work? Tesla or Facebook? Let's look on the daily chart again. Okay, Facebook, Tesla. They're both momentum trades. One of them is not working today. One of them is definitely working today. So what you do is you go ahead and either close down all of your, this is if you don't have an unlimited amount of money, you got to allocate your dough so it keeps working for you. You go ahead and close down your Tesla position and get into Facebook more. You take a bigger position in Facebook. You are now underweight Tesla. You are overweight Tesla. What have you done? You have been your own market analyst. You've raised Facebook's rating to an outperform, and you've lowered Tesla's rating to a market underperform, or maybe even a sell rating based on technical considerations. So you've got an overweight position in Tesla. You've got, in Facebook now, bigger than average. Maybe it's your biggest position. Why? Because it's working. I'll get back to that in a second. Then on Tesla, maybe you're out of it completely. Why? Because the only reason you were into it because you thought the stock was going to continue going. It was up above 137 at one point today. Now it's down 9 points from the high. And so you'll set a price alert at, say, $137, maybe $137.50. Maybe you'll set a series of price alerts at $130, $132, $135. Because you're only interested in making a bullish trade on Tesla, but the trade that you have did not work. The trade that you had going on Tesla, short-term trade, didn't work. You've closed it out. Okay, this is now a new trade possibility. You set your price alerts according to to my suggestions that I just gave you. And then you forget about this stupid stock. You don't care if it goes down to 126 or 125 or something because you're not interested in shorting the stock. Maybe you set a lower price alert or something like that because then you'd be like interested in buying it again because you saw what it did here. But the point is, you're not interested in Tesla now. You have an asset allocation issue. You are taking this out, you're putting it in. You're putting it in to Facebook. You're overweight Facebook. Then what do? You go back to the intraday charts and you start looking at them. You make your decisions. Okay, I'm seeing Facebook. Ooh, looks like it's starting to roll over. It started down here about, looks like, 1 o'clock. Okay, typical time that the traders come back from lunch after talking about what they're going to be doing. The stock's down, 60, 70 cents or something like that, and looks like maybe it's going lower. So what are you going to do? Maybe you're going to close out that position completely and say, you know what, I had some good dough on this, and what I don't want to see happen, what I'll kind of be bummed about is if I see the stock, if I see this box ultimately transition to this. where the stock rallied up during the day and then fell back down to its opening print, which generally indicates that the next move is going to be back down. So you don't want that to happen, so maybe you're going to go ahead and take some profits. Or maybe what you're going to do on this option position, you're long some calls that are 33s, 35s, whatever they are, and you're going to say, you know what, I still like this because I'm not just in it for a short-term trade. I'm in it to win it because I think Facebook's going to be added to the S&P 500. I think the market's realizing that they're starting to monetize their mobile stuff. They're doing some other things with small gamers. You can look at that news online. They're doing a lot of things. So I like Facebook for the long term as well as the short term. So maybe you've got some long-term options in there too. But maybe on a short-term basis, you're thinking that this is peaked. So what are you going to do? Well, maybe you haven't allocated additional money into Facebook from closing your Tesla trade. Maybe you have. But what you're now doing is saying, okay, I've got an overweight position. I've got more money in Facebook because I think it's moving higher and I don't think Tesla is. But I think I better hedge myself. So what are you going to do? Well, Tesla's traded, the highest was at 37.66. So maybe what you do, my alerts keep going on, is you hedge your bets by selling on near-term options with a higher strike price. Maybe you're going to sell the 37s. Maybe you're going to sell the $38 options that are maybe expire in August or maybe September to generate a little cash if Facebook continues lower. But on the other hand, if Facebook starts to move higher, you're still going to have a heck of a profit because of the difference between the strike price on the options that you bought versus the strike price on the options that you sold. So what you're doing is you are absolutely hedging your trade against losses, but at the same time, if the stock does move the way you thought that it would, you are still locking in a really nice profit. So anyway, I want you to think about this. The bottom line is that with options, as with stock, but with options, you have options and you've got a lot of them. I want you to be thinking about what those options are. Don't just sit there passively on your portfolio when some of your trades are really working well and look like they're going to continue to work well, and other trades are not really working well and you're sitting there going like, well, I guess I just got to be patient with this one. Maybe that's the deal. Maybe I just need to be patient with it and we'll see what happens. No. If you want to put more money into another trade, then close the one that's not working and go into the one that is working, overweight it, and then either hedge it or watch it very closely. Remember, you're speculating, so there's no guarantees that you're going to make money. But if you're sticking on the right side of the trend, then you have a better chance of being overweight in the one that continues to work really well. You may wind up being overweight in the one that looked like it was going to work really well, but then ultimately rolled over and moved against you and you had to close out for maybe, not as much money as you thought you would. But you've got a better chance of being in the trade that continues to work in a big way if you take your money out of trades that aren't working very well and go into the ones that are. Put another way, you're going to be right on some trades. You're going to be wrong on other trades. Let's just strive to have less money in the trades that aren't working, the ones that we're wrong on, and more money in the trades that we're right on. And we can't do that from the outset. We have to wait for the stocks to confirm that we're either right or wrong, and then we take action. That's how you keep your money working to the maximum, and that is how you blow up the value, and I mean that in a good way, of your portfolio using options by being in the right positions at the right time with the right weighting. You have to remember about the weight. Always look and see in your portfolio, and any trading software will show you this, What is the dollar amount that I have in any particular position or in multiple positions on any particular stock? Then you look at the chart of that stock. Is it warranted that I have my biggest position in Amazon right now? Or should I have my biggest position in GameStop or Facebook? You know, all of these are trades that we have going on. So I look here at these two. I want to be overweight in Facebook, which I am. I want to be overweight in GameStop, which sadly I'm not overweight. I should be, but I've been working today, not just trading. Amazon, very much underweight in Amazon. Very much underweight because right now the trade isn't working. Once it starts moving higher again, then I'll get back there. So, okay, so anyway, I hope this makes sense to you. Very, very important for you to keep your money working. Okay, got to keep your money working, and that means in the places where it's not working, well, fire that position and put it into somewhere else. Okay, I'll see you next time.